The charts are everything. Everything is in the charts. Institutional money, you can see money flow in the charts. You can see volume patterns and price patterns. And again, patterns and setups, it's something that you could go back hundreds of years and you could actually see these same patterns playing out, which is why we know they're high probabilities.
Hello and welcome to Wealthy Value. In today's video, the President and CFO in the MoneyStocks.com, Gareth Soloway, updates about the current situation of the global macroeconomic environment, the importance of interpreting and analyzing charts as a trader and investor. He also reveals the biggest lesson that he learned as an investor in shares when is the perfect time to become a trader. Gareth Soloway also discusses his long-term outlook for Bitcoin and gold. Make sure to stick around till the end of this video where Gareth Soloway explains the best way to use Bitcoin charts to predict the action of crypto markets. By the way, did you know that 49 million Americans were victims of identity theft in 2020 and it ended up costing them a combined $56 billion? This isn't happening just to people who fall for phishing scams or use bad passwords. 37 billion records got hacked in 2020 alone from major social media sites, national grocery store chains, cryptocurrency exchanges, pharmacies, and phone and internet providers. That's why I am excited to partner with Aura, who is sponsoring this video. Aura's app uses AI and machine learning to protect your identity online. You tell Aura what email address, account numbers, and phone numbers you want monitored, and their algorithms scour the dark web, data brokers, and public records, and will alert you to any criminal activity fast. Aura's app also features a VPN that encrypts your browsing history and allows you to stay anonymous online, and their antivirus software will block malware and viruses before they infect your devices. Someone becomes a victim of identity fraud every 14 seconds. Don't be the next one. Click the link in the description to try Aura free for 2 weeks and see if your personal identifiable information has leaked to the dark web. And now, back to our video.
So every trader or investor that starts is going to make mistakes. It's just natural. We're dealing with shark-infested waters, meaning that there's algorithms, there's institutions, there's really good traders in there. And so you have to get to that point of being able to compete and ultimately beat them. And it takes a lot of mistakes. And the goal is that through these educational courses, I've revealed my mistakes and then how I've learned, and basically all the tidbits of knowledge from discipline to emotional control to human psychology to charting that basically puts us in a position to skip and bypass a lot of the mistakes most people will make and get to profitability as quickly as possible. I've gone long when I meant to go short. I've gone short when I've meant to go long. Yeah. Some of my worst mistakes are, I think in my early years, I had gone long U.S. steel going into earnings, and after the bell, it shot up massively. Well, I was like, all right, you know how fast you have to react. I'm like trying to punch in the buttons to sell and take I think I was up like 20K at this point. It was like some ridiculous stupid bet I made back then. But instead, so I sold it, right? And then I'm looking and I'm like, that's weird. It's not vanishing out of my account. Well, I had, instead of 10,000 shares, I had doubled it up to 20,000 shares. And then I was even more furious to try to enter the sell order because I was freaking out if it came down, how fast I would end up losing a lot of money. Because on earnings, this is the tricky thing, is when you're playing earnings, it can go up real fast, but it can go down real fast too. So, I mean, it's all about just doing your best and learning and learning from your mistakes, right? You have to really just reset. Yeah. Because it's not about, in a bull market, and we've seen so many bull markets in stocks and in crypto, it's about thinking that, oh, this is the easiest thing in the world. Look at my account just go up exponentially. And it's not like that. And if you're going to be a trader that makes money in bull and bear markets and not losing all your money when the bull market's over, you have to learn how to read charts. Charts are, people think I'm crazy when I say this, but the charts are literally the purest truth that we will ever find. Because if you listen to someone saying something, there could be a bias there. If you go to Twitter, there's a bias. Even if you go to news, right, there's a bias. But the charts don't lie. It's telling you what is there. I always say that a chart is like a book in a foreign language, right? So let's say it's, Chinese for me. I don't know how to read Chinese. But when you learn how to read the charts, all of a sudden you can start reading it, and the charts will tell you what to do, or at least what the most high probable outcome will be. And that's everything, right? The problem with fundamental analysis is that it makes sense in certain markets, and then in other markets, it doesn't. And the reason it doesn't is because markets are ruled by two things, greed and fear. right? We saw greed on the way up and then fear and panic on the way down. And so you look at like the PE of a stock, right? And you say, oh, well, you know, in this market, it's a 40 PE. Well, guess what? Now we're in a bear market and it's now a 20 PE. So how did that make sense, right? So, but the charts will tell you when you look at a chart and it's gone vertical and it's gone up 100% or 200%, there's something missing there. There's a certain type of market environment that's causing that, and you never want to be someone that's buying up at those levels. So the technicals will tell you that. The greatest example recently was Exxon, right? Oil was up above $120. Exxon was like nearing all-time highs, and everyone was bullish. The media was saying $150, $200 a barrel, and I'm looking at the Exxon chart, and it's like it's gone vertical. So it's extended, the metrics, the RSI, all that stuff is extended. And then it's at a double top from 2014. And if you're a technician, you're like, wait a minute, that's a short. Double tops you short. And so I shorted it. And then obviously we've seen, oil come all the way back down. These algos are trading on very, very micro time frames. And in fact, a lot of times the algos are wrong, right? They'll react based on one news headline. And they'll all of a sudden sell the market. And then all of a sudden you see the market roar back, right? And these algos are on the wrong side. So it's not. It's absolutely technical analysis works because it's trading humans and human emotion and not trading humans, right? We understand we're trading human emotion. but the bottom line is, yes, it still works. And in my opinion, it's always going to work because humans don't change. So if you go back to ancient Egypt, you could trade the same way if you could chart out anything. And I often say, if you could chart like rocks, right, or whatever, I mean, it doesn't matter. If you could just make a market in anything, the charts are going to be the same thing. Double tops will be double tops, double bottoms, gap fills, reversal candles, all that stuff because you're just trading people. Probably there's no perfect time, right? I mean, I think if you're 70 years old and you're retired, that's the perfect time. If you're 20 and you're just like thinking about how I'm going to invest the beginning of my 401k, I think that's the perfect time. But the key is do it with a game plan, right? It's doing it with more than just, hey, I saw Kramer say this, or, oh, I saw people on Twitter pumping this, so I'm going to jump on the long side. Like, this is what always drives me nuts, is people put their hard-earned money that they literally worked so hard to make, and sometimes they just throw it in something, and they're like, oh, well, why did I lose? Well, you're just following random people that you don't know if they're even good at what they do. So you have to really say to yourself, I'm going to become advanced and know what I'm doing, and then it will work out. And we discussed this before about, you have a brain surgeon that, you can't just be like, oh, I watched this video on brain surgery. Can I operate on your brain now, right? I mean, they go to years and years of school, rack up tons and tons of debt, and then they still have a grueling job of high intensity stress versus a trader where if you put in less money to learn and you actually get a good education, you can make more money with more freedom and you could travel the world and still trade. And I've always said, like, you could be 95 years old and laying on your deathbed, right? And if your finger works for a mouse, you could be like, oh, I need $1,000 today. Click, click. Okay, I made $1,000. It's like the greatest freedom in the whole world to learn how to invest and trade. And you'll never be in a position where you don't feel financially secure when you learn how to trade, because you can always go to the markets, and the markets are it's almost like having a Federal Reserve printing press, frankly. What you have to do is you have to look at past cycles of Bitcoin, right? And was in 2017, did in a month it go from 20,000 to 3,500? No, it took about a year.
Yeah.
So you have to say to yourself, okay, well, if you're making this massive corrective move, chances are it's going to follow past cycles, and that's exactly what it did. So I mean, I think that's the important thing, is that you have to have realistic expectations, and the charts tell you that, right? I mean, the charts told me that if you looked at past cycles, 2013, 2017, it took 8 to 12 months to reach that key level, and that's exactly what this cycle in Bitcoin did. So it really no surprise there. I mean, yes, partially luck, sure, we can throw it out there too, but at the same time, I've made enough calls in my career where I'd like to think it's not all luck. So it certainly does, more so to like the longer term positioning. And I think macro, for instance, how the Fed is handling things and what they're doing, you have to be able to look like 3 steps ahead, right? And I think that's another issue that I cover in these educational courses, is not taking a news story as like the news story. People are always saying to me like, oh, there was an African country, and it was a news story that they just discovered 20 million trillion ounces of gold, and I'm like, well, you could believe that, but then if that was true, wouldn't you think gold price was collapsing? And it hasn't even budged, right? So you have to like look at these type of things and kind of think through it. You just don't want to take anything at face value.
Right.
And when it comes to economic news, remember that the institutions already know the number that's coming out, let's be fair, and that they're already thinking 3 steps ahead. So when you look at like a CPI or PPI print, they're already saying, okay, well, we can see commodities collapsing, so yes, it's high, but we're going to start buying the market because it's coming down.
So what are your thoughts about Gareth's take on Bitcoin trading and investing? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.